Hey guys, Chris from the Hidden Reserve here. In today's video, what I want to be talking about is creating a retirement that you cannot outlive. Okay, and this is something I've really wanted to make a video on for a long time, and I just feel like it is more important than ever right now with all the uncertainty that's going on in the world and the amount of baby boomers, specifically if you're a baby boomer watching this, the amount of baby boomers that are retiring. I read something, it's like 10,000 baby boomers a day are going to be retiring roughly for the next 2 years. And that to me is insane. That's a lot of people, and having a solid retirement strategy is more important than ever right now. I mean, it's very important regardless, but especially right now. So what I want to talk about, and I'll just get right into it, is the importance of having an aspect to your retirement portfolio that's guaranteed. And a question I want to ask right away is, how many of you can confidently say that you're going to retire the way you want to, like 100%? Like there's this 100%, this is going to happen in my retirement. Okay? And that I ask that because most people are strictly in the market. Okay? And there's nothing, let me just go on this tangent real quick. There's nothing wrong with that if you can stomach just knowing hey, I might wake up tomorrow and half my retirement's wiped out. 30% of my retirement's wiped out, whatever the number is. It's just knowing, are you okay with that? And another thing is, do you have other assets to lean on? Because if all of your retirement's in a 401k, and side note, I don't have a problem with 401ks, it's just, I don't think it's smart to have all of your retirement banking on this one thing, because if 2008 happens, I mean, what are you going to do? It just throws your retirement, the trajectory of your retirement off significantly. How many people back in 2008 predicted that? I mean, there's probably one person, a handful of people. But again, it's the point I'm trying to make is it's not optimal to have your retirement banking on this, essentially. I hope it goes well. I hope the markets continue to go up over time. I hope. It's not about hope. Yes, it's so important to have. You need equities. You need to have market exposure. But what part of your financial portfolio is truly guaranteed and also not correlated to the markets? And that's key. That's so important, is having an aspect that whether when the stock market's down, when crypto's down, well, I hope you're not banking on crypto for retirement, but the stock market's down, real estate, whatever you're using right now to retire, whatever vehicle or vehicles, what do you have that's going to allow those things to recover when they're down? Because the last thing is you got $1 million portfolio, goes down 30%. Now you're down to 700,000, and you were planning to take, if we're going off the 4% rule, you were planning to draw 4% from your portfolio. Well, 4% from $1 million, that's 40 grand. Now it drops to 700 grand. I mean, that income, your income drops drastically. And what if you had something else in your portfolio that you could draw from, take income from, and still get that $40,000, whether it's 4% or 7%, doesn't matter. It's what else in your portfolio gives you the opportunity to still draw the amount of income you need to allow those other assets or assets to recover, so that you don't have to deal with that scenario right there. Okay, and that's just so important. I get fired up about it because it's not talked about enough. The traditional advice is you maximize your 401k, you go into retirement, you have Social Security, you should be good. You should be good. Why is the conversation not let's guarantee that you'll be good? And there's not many things out there that truly offer guarantees. And one of the things I'm going to be talking about, there's two main products that I'm going to be talking about, strategies that give you these guarantees. Number one is, we're going to talk about whole life insurance, okay? Now, hear me out. This is where it's really important to look at the aspects, the key elements to a whole life insurance policy. So overall picture, before I dive into it, remember, we're trying to find ways to guarantee an aspect of our financial portfolio, of our retirement. That's not saying ditch the 401k, ditch the IRA. No, that's not it at all. It's like, what else could we do? Whether it's rebalancing our retirement portfolio, whether it's shifting some money from a 401k or an IRA or another bucket of money over to this vehicle. I'm not saying to do this. I'm just giving you the education around the options. But that's what we're looking at. What are the key aspects of a whole life insurance policy? Number one, guaranteed growth. Okay? That's so important to be aware of. Like, there's not many vehicles out there. There's not many financial tools where you can say, I am guaranteed to make money every single year. Whole life insurance is one of them. You're going to get guaranteed interest every single year with a whole life insurance policy, regardless of what the stock market's doing, regardless of real estate, crypto, etc. You are guaranteed to get growth. Now, why this is so important is, or the next thing that's so important is liquidity. 401ks, you've got the 59.5 rule. Traditional IRAs, you got the 59.5 rule. If you access that money early, you're going to be whacked with a 10% penalty, and on top of that, you have to pay taxes too. Well, with a whole life insurance policy, you don't have the 59.5 rule, and depending on how you go about accessing the money, whether it's a withdrawal of your basis or you're taking a loan against the policy, if it's set up properly, that's key. I have other videos talking about that. That won't be taxable to you, okay? Very important to be aware of. And how I want to tie this into what I was talking about in the beginning of the video with volatility is, let's say, we'll use the same example. Let's say your 401k, you had $1 million in there. You're planning to withdraw 4% a year, roughly 40 grand before taxes, okay? What happens when the market goes down? Well, if you had another asset in your portfolio that was stable and growing, and you had a significant amount in there, not even a significant amount, just enough to cover the income you were going to take from your 401k, 40 grand. Let's say you had 100,000 in a whole life policy sitting there, and the markets crash and you need to take 40 grand out. Well, instead of taking it from your 401k that year and depleting that even more on a down year, what you could do is you could tap into your whole life policy. Because you know, oh, I've got this bucket of money, that's going to continue to grow. It didn't tank with the market. I can access that and use that as a buffer essentially for that down year. And what if you have another down year? You could access it again and still get another 40 grand of income without having to touch your underperforming asset, if you want to look at it like that. And then let's say, this is all hypothetical, but let's say year 3 is when things recover back to where they were, which would have to be a significant, return. But let's say that did happen. It's like now you have this other bucket of money, your 401k, that's recovered, and you don't have to use the whole life anymore. It's like, okay, I can go back to drawing income from the original plan because my portfolio recovered, or maybe it's even higher than where it was before. Now I'm going to get that 40 grand of income or whatever the number is, and my portfolio hopefully is still going to grow. So I hope that made sense, and I put a lot of emphasis on that because having a buffer asset is what I like to call it, is so important because it just gives you breathing room and peace of mind knowing I can still get the income I need from somewhere, and also not deplete my retirement accounts even more so because the market didn't return. So that's where this comes into play. And another thing I want to make very, very, very clear is that whole life insurance, any life insurance product rather, they're not retirement vehicles, they're not retirement alternatives. You'll see a lot of people online saying, oh, like the whole life on IUL is so much better than a 401k and IRA. You can't even compare the two. It's comparing apples and oranges. They're completely different. Vehicles, you can't compare them. And it's not meant to replace your retirement. It's meant to be a buffer asset. In this context, at least, whole life insurance. It's a great alternative. It's a great buffer asset. It's a great addition to your financial portfolio to strengthen it, give you more peace of mind, and ultimately just give you more options at the end of the day. Okay? So that's what I wanted to cover on, specifically on whole life as an alternative asset within your portfolio. And then the next thing, which I'm not going to get super in the weeds of, but the next thing I wanted to add or talk about is we often overlook the different phases of life that we're in. So as we're building our retirement, we're in the accumulation phase. And that's where we're often taking more risk in the markets and trying to build up a nest egg so that we have something, a significant amount. Obviously that's relative and different for everyone, but having an adequate amount of money when we go to retire so that we can draw from it, ideally draw, income from it for the rest of our lives. But we often overlook, okay, the way we accumulated the wealth is oftentimes not the best way to distribute the wealth to us. Okay? So that's what I want to talk about is what are some of the best ways to distribute your wealth back to you? And again, this isn't a one-size-fits-all solution. It's different for everyone, but I'm just going to go over the concept here. So when it comes to distributing wealth, a very effective way to go about that is using an annuity with an insurance carrier. High-level overview, what's an annuity? You're essentially giving a lump sum of money to an insurance carrier, and they're giving you, in exchange, they're giving you a paycheck that will last for the rest of your life. In a nutshell, high-level overview. I have other I'm going to be making other videos really deep diving on annuities. High-level overview, that's essentially what an annuity is. You're trading an asset, whether that's funds from a 401k or wherever you have that cash built up. You're trading an asset for a guaranteed paycheck that you can never outlive. Okay? So that's really important because when we're talking about traditional retirement advice, 4% rule, this is an alternative to getting more to the 4% rule. So again, I'll go over an example. Let's use the same $1 million I was talking about with the 401k. You got $1 million in a 401k and you want to withdraw, you're going to follow the 4% rule and take 4% of that a year. Well, with annuities, not all the time, but some annuities might give you a payout of, if you're older, the better with an annuity, but you might have a payout of 6, 7% I've seen lately. I have a lady I'm working with right now. She wants to retire at 67 years old. The payout factor is 7.5% for her. Guaranteed. Which is to me, that's crazy. If you had $1 million and you're going off the 4% rule with your 401k, that's $40,000 a year in income. Well, in this scenario with the annuity, $1 million in there and you're guaranteed to get 7.5% payout factor. That's $75,000 a year. Guaranteed. And something I want to add there too is with an annuity, how it works, when you deplete your original balance, you're still going to receive that check every single year for the rest of your life until you die. And whatever's going on with the markets, whatever's happening in the world, especially if you're with a really solid carrier that's been around for a long time, has a good track record, you're going to keep getting that check every single year. That $75,000 in this case, every single year. And that's where you start to open up the doors of a whole new world, because it's like, okay, I know for a fact I am going to get this money, and I know if my 401k or other assets go down, and I set it up in a way where my guaranteed income, supports my lifestyle, my minimum expenses, and just maybe some giving, however you want to go about that. But if it's set up in a way where your guaranteed income covers your lifestyle, let's call it that, that's just it's just such a great feeling because you don't have to worry and question, am I going to, one, have enough money to to last the rest of my retirement? And number two, is it going to be enough because you already diligently planned, like, hey, this amount of money is going to be enough to cover my lifestyle? And obviously that looks different for everyone. There's inflation and other things to consider, and that's where actively managing a retirement plan is important. But the point is, an annuity could be, in a lot of scenarios, the most effective way to actually distribute your wealth back to you. And a question I hear all the time, or rather a statement, well, I guess it's a question, is, that makes no sense. Why would I give $1 million, in this case, why would I give $1 million to an insurance carrier for them to give me my own money back? I hear that all the time. It's like, okay, then you manage your own money and distribute 7.5%, $75,000 a year on that money, at least every single year. Like, knock yourself out. It's like, because they're taking on all of the risk, and they're the ones that have to pay that to you no matter what's going on. If they, again, that's why the carrier is so important. But they're the ones that are managing that risk for you. It's like, if you want to be your own, manager of money, knock yourself out. But that's the whole point of the annuity, is distribution of your wealth. It's not to build wealth. It's not to take risk. It's like, okay, like, I spent the good part of my life building up $1 million or whatever it is. I just want to know that every single year I'm guaranteed to get a check, an amount of money, regardless of what's happening in the markets. That's where the annuities shine. And again, especially right now, like, some of the payout factors are pretty high. I mean, the older the better. That's how it is with an annuity, because the insurance carrier, just to be blunt, I mean, they want you to die as soon as possible, because as soon as you die, the guarantee of them having to pay that money out is gone. And then on the life insurance side, like with the whole life insurance, for example, like we talked about, it's the opposite. They want you to live as long as possible because they want to wait as long as possible before they have to pay out the death benefit claim. So just kind of like a fun fact, I guess, something to see is, like, annuities, they want you to not live, they want you to die as soon as possible, just being blunt. And then life insurance, they want you to live as long as possible. But anyway, I'm going on a tangent, but point is, and I'm going to start to wrap it up here. You need to find vehicles to attach and enhance your financial portfolio when you go into retirement, to just allow you to live the retirement you want to live. And it can't just be based off of hypotheticals. Like, it can work out, okay? And I'm not going to sit here and say that having all of your retirement, let's say let me back up a step. Let's say, you don't mind the volatility, you can ride the ups and downs, and that doesn't bother you at all. Like, that strategy can work, and I'm not knocking it, because there are some people where that does work for them. But if you're more on the conservative side and you don't like the fact that 2008 could happen in 2026 or whenever, maybe the end of 2025 as of recording this. If that thought bothers you, just know there's ways to eliminate that from you, from yourself. There's strategies you can implement to give you more peace of mind, to add in some more guarantees, and ultimately predictability and stability and certainty with your retirement. So I hope this video helped you guys. I'm going to be making more videos, getting more in the weeds of annuities, also whole life insurance, and just explaining those products more. So stay tuned for that. And if you do have any questions at all of what we talked about today, leave them in the comments below. And if you're new as well, I have in the description, I have 2 links. If you're a business owner, there's going to be a link for you. If you're not a business owner, there's going to be another link. But what I'm doing is I'll build you a blueprint, basically breaking down your financial scenario and giving some suggestions on strategies that may be able to help either your business or you and your family. If that's something you're interested in, it's all in the description below. Just make sure you click the right link. Again, for business owners, there's a specific link. And then if you're not a business owner, there's another link for you. And yeah, just know that's available. And again, I appreciate you guys watching. Subscribe if you haven't, and I'll catch you in the next video. God bless.